The financial services company Old Mutual is considering all options on the table under the strategic review announced last November. Now, there's been quite a bit of speculation, especially this week, that the company is plotting a $12.8 billion breakup that could trigger a takeover for the company's assets. Now, the company said it's not yet made any decision on the review process, but it will give an update when it announces preliminary results on the 11th of March. That's this week, Friday. Old Mutual shares soared by 11.3% to 200 pence on the London Stock Exchange, outperforming effectively a 0.07% dip in the FTSE 100. Old Mutual's Joburg listed shares are also up by a comparable margin of 11.8%. The company had also reported strong sales across its Africa and emerging markets operations, with the latter up 22% in local currency terms. Let's expand this conversation. Angelo Coppola is live in Johannesburg. Richard Bestick is live in London with more data on this strategic review and what it means to potential investors. My first question goes to you both, gentlemen, starting with you, Angelo. Why is Old Mutual worth more in pieces than as a single firm?
Well, look, the bottom line, besides the speculation, the answer is fairly straightforward. That's according to an asset manager who tried to explain it to me a little while ago. Someone operating in those particular markets that Old Mutual is operating in at the moment is willing to pay well to get their hands on those businesses which appear to be well run. It's really an issue of the sum not being worth more than the parts in this case. The analogy, as was explained to me, is around a cocktail drink. When a cocktail of businesses is put together, parts of the business get disguised or get lost or don't get efficiently priced. And that's where the problem is, because the aggregate price is less. With Old Mutual, of course, you heard that it was trading at around 11% up just now. It actually closed at around 6%. So, Raman, it's really a question of the sum not being equal to the parts.
Indeed. Same question to you, Richard. From the perspective of investors and, of course, fund managers on your end in the UK, what's the rationale for this sale and breakup?
Well, from this end of the telescope, it is similar to what Angelo was saying there. It is basically to free large parts of the company from the dead hand of a declining rand and low profits there. Something like 68% of the business is carried out in rand at Old Mutual, and that's fine for those businesses which are confined to South Africa and the African continent. However, beyond that, they have very valuable wealth asset firms here in the City of London. They also have US management businesses. These are lucrative and can be sold off. Indeed, the UK wealth management firms are already having potential suitors circling. But the details are as yet unclear. This is at the moment an assumption that we expect it, and the details will likely come out when the company announces its full year earnings on Friday, Rama.
Indeed. Angelo, there are concerns that this breakup, if it does happen, as we expect it to on the 11th, could trigger a sale of assets which OML had acquired in different countries. In the case of Nedbank, because OML has over 50% of that bank's shares, how would it be affected?
Well, Raman, Old Mutual owned 55.4% of Nedbank. It's a controlling stake. And Old Mutual, I'm told, has two options here. Firstly, it could attempt to find a buyer, and that's probably not going to be too difficult because South African banking licenses are pretty hard to come by. The bank also has a very strong sub-Saharan African footprint, which is generating strong returns for them. However, most potential suitors don't want to pay for that controlling stake or that controlling price that the owner would demand. The second option, it could unbundle those shares in Nedbank so that everyone who owns Old Mutual shares then automatically gets a stake in Nedbank. This option may be attractive to Old Mutual if they're pressed for time. A case of pragmatism topping a return on investment, but it's all speculation at the moment. Anyway, Nedbank closed some 3.9% up at the close on the JSE today. Raman?
Indeed. Finally, Richard, in the UK, Old Mutual also wants to be the top retail investment enterprise in the market. That's fairly straightforward to say, but how exactly are they going to do it?
Well, that's what we anticipate will be given to us in detail when the Chief Executive, Bruce Hemphill, makes his announcement on Friday when he gives those annual earnings figures. He is expected then to detail his plans. I think it's probably worth pointing out the rise in the value of Old Mutual shares, that the city, if it doesn't know the details, is confident that the plan is a good idea. The idea of breaking up Old Mutual into profitable parts and parts that can be confined to South Africa. But that is still something that we will be learning further down the road. Rahman, I think it's probably worth bearing in mind here that this is the second time we've had this kind of conversation. Only last week we heard Barclays was pulling out of South Africa, pulling out of the African continent for very similar reasons, that its profits were calculated in a declining rand and that profits were low. This again with Old Mutual is very high on the agenda, is the value of the rand, and this is something that presumably the South African government will be concerned about and will be returning to. But in the meantime, the Old Mutual will be, we anticipate, coming up with this breakup plan that has been highly anticipated now for something like 9 months, many months before Bruce Hemphill, the chief executive, moved into his job last November. So we've been anticipating it for a long time. Friday comes the detail.
Indeed, Friday is D-Day. We'll talk to you again then, gentlemen. Thank you for your time. Angela Coppola in Johannesburg and, of course, Richard Bestick in London.